Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and we are live here with Todd Bubba Horwitz from Bubba Trading. Todd, thank you so much for joining us today.
Elijah, always great to be with you. It's always a pleasure to be part of your network.
It's great to have you on, and I wanted to have you on today. We're seeing a big downturn in the stock market these last couple days. Your take on what we're seeing?
Well, I think first of all, Elijah, we have very light volume, so that takes some of the steam out of anything. We've had a market that was rallied basically on air for about 3 or 4 weeks, and finally Friday you saw a little bit of selling. Then of course yesterday was a heavy sell-off. Today's kind of mixed. We kind of rallied a little bit earlier this morning, and now we're kind of mixed with the NASDAQ and the Russell higher and the Dow and the S&P lower. Look, we have a very rough situation going on in this country, in this economy. And I think that the selling has just begun. I think we've had a divorce for a while of the economy and the stock market, and they may be getting back together right now. Maybe they had some good attorneys.
I think that's very interesting there that, yeah, they might be getting back together here as we're seeing maybe the stock market kind of realize that the economy is not doing so well. You've recently mentioned that there are major red flags signaling that there could be a severe economic downturn going forward. Obviously, we're already kind of in that. We're technically in a recession right now, but can you share with us what these red flags are?
Of course. Well, first of all, the recession is arbitrary, right? If you listen to the economists, they have no clue what a recession is. They'll tell you 10 years later that we were in a recession in 2022. The first thing you look is your own checking account, your own balance, and how you're living. But the red flags are certainly a third quarter most likely of negative GDP in a row, which 2 quarters before they changed the boundaries was considered a recession. Then you take a look at the housing inventory. Housing inventory is at about 27% above a year over year. Listings are down about 20% year over year. Interest rates are going through the sky. Okay. In fact, like in Las Vegas, in one of my homes, if you want to buy a new home construction there, you've got to be able to qualify for a 7.5% mortgage. So we're no longer in the house flipping business. We're now in real, you want to buy something, you really got to buy it. But, people think that, well, my house is worth less now. It's really not worth less because it's all about money. I think the banks are in trouble. I think they're well over leveraged. As much as they want to promise me and tell me that they've been through the audit and everything's good, we've heard this music before. And then you get inflation, you're going to have a food shortage. I mean, there's so many issues down the road that could be cured, but unfortunately, the current administration does not want to cure them.
Now, when it comes to what is happening, you mentioned how with the housing market, you've also stated that we could really see a repeat of what happened in 2008. Is that really your view that we could see a severe downturn just like that? I mean, the 2008 crisis almost completely collapsed the economy.
I think it's going to be worse than 2008. I think, and not only that, but I think that when you look at the current administration, I think it's not being done intentionally. Okay. So those are the issues that I have a concern about is, if you look at what's going on, we could fix the economy in 10 minutes, right? We could go back to pumping oil, fracking and shale producing. Okay. And if we went back to bringing oil out of the ground, okay, which would not change the carbon footprint for everybody who's in this climate change stuff, it would not change the carbon footprint whatsoever, but it would drop the price back down, by 50% or 60%. Backward belongs, which then could stimulate the economy. You've got a Federal Reserve trying to hike rates into a slowing economy to begin with. That's never a good mixture, which is why the Fed is so far behind the curve. Ben Bernanke should have never panicked in 2013. They should have been hiking rates all along. Nominal rates are still negative. And if you want to figure out how you figure out what nominal rates are, you take the 10-year and you subtract the CPI, which let's say 8.5 if you believe that, which I don't, but 8.5, 3%, you're negative 5.5% still. Okay, so the Fed could raise 5.5%, we'd just be back to zero. So the overall inflation, wages are not keeping up with the inflation that we're having. There's just so many issues and problems that you can't possibly overcome everything that they're throwing at us. And of course, as I said, the administration that's in power now, I think it's almost being done intentionally to destroy the economy and the capitalistic system that we live under.
It is very interesting how, a lot of these events right now are having a very negative impact on the economy. If we look, for example, at the sanctions for Russia, we've had Bob Moriarty on, and he's pointed out how it seems like it's hurt everyone except for Russia, these sanctions.
Well, Russia is prospering. Okay, this is the problem when you talk about sanctions. Okay, and this is the problem when you have too much rhetoric from an administration that is absolutely clueless. Okay, Russia, if you want to punish Russia, then you have to affect their pocketbook. You have to affect their money. Okay, since we are not oil producers anymore, we have no effect on what they do. They are not only are they making more money than ever, the ruble is charging higher. They are in great shape. They totally control the European market, and they just forced Venezuela to stop sending oil to the EU. All right. So again, they're controlling the market because we're not doing anything. We talk a lot, but we're not doing anything. You want to put sanctions on somebody, you got to hurt them some way, and there is no way that we can hurt Russia unless we go back to producing oil and becoming a net exporter. In which case, we could then help Germany, who's in big trouble. Okay, the UK, which is in big trouble. I mean, you realize what those guys are paying for natural gas? We hit 14-year highs yesterday. They're 10 times what we are paying for natural gas. Americans are going to be paying 47% more for their electricity bills this year. So you tell me, why don't we fix that? Why don't we make it so the middle class can survive and thrive versus struggling and go broke?
Now, I did want to get into your perspective on what this all means for the precious metal markets. I know that you are still currently short paper, gold, and silver. You always mention that you're either always long or short the paper market, but you hold physical metal. But your perspective on why you see, at least for the short term, that precious metals are going to go lower.
Well, I mean, again, the dollar is really strong. Now, I am not an advocate of the dollar strength being bad for commodities, which gold is a hard asset commodity, but it is. That's the interpretation of the street, right? A higher dollar makes commodities cheaper. I don't think there's any reason to see gold start to run here yet. The price action is telling us, the trade in which you're watching, August 12th, we haven't had an update. Well, right now we're up, but we have until today, we haven't seen an update since August 12th. So when we made the peak rally, that was the end of it. And now we're just rushing lower. And I think people have to understand, if you're trading the market, okay, and you're watching on a regular basis, your biggest concern is not the news, not why it's happening. The market will tell you why. The price action will dictate what should be next. And this morning I wrote that I would be very surprised if we did not see a rally in gold and silver today. Okay, because again, they go straight down, they get too far out of whack, they're going to revert back to the mean. But I would think this is probably just another great selling opportunity, although I'm still continuing to buy gold, silver, and platinum and putting it in my safe.
Now, we do have a question from Jason here, and he's wanting to know about the US dollar and its connection to the gold price, as you did mention there. The question is there really any tangible correlation between the dollar strength and gold price, or is that the story to cover derivative suppression of the spot price?
It's interesting. The correlation in which we've all been taught under this ridiculous Keynesian economy theory, okay, is that a strong dollar is bad for commodities because it's bad for export. Now, obviously, we're not worried about exporting gold because it's not a soft commodity, but it still is a hard asset commodity. And it brings the price down because of the dollars it takes. You put together into that equation the fraudulent fiat currency system that we live under. It's not just here. All of the fiat currencies are a fraud. Okay. The minute they took backing out of them and let the central banks have a free run and a free roll, all they're really doing is taxing the world with, they say taxation without representation. That's what you're seeing. And that's what's creating this massive inflation, because they're able to manipulate the dollars. Okay. And actually the US dollar looks strong, but it buys a lot less than it bought 3 weeks ago. Okay. So again, it's like an artificial self-fulfilling type prophecy. And I think that the correlations always apply out eventually, but I don't think at this moment, right now, that gold is rallying because the dollar is falling a little bit today. The dollar is still at 108, which is at extremely high levels for where it has been.
No, just for our new viewers joining us right now, we're with Todd Bubba Horwitz of Bubba Trading. Thank you, all our viewers, for joining us here live. If you have any questions for Todd, just put it in the chat box there and we'll answer them on air. Now, I did want to ask you about this dollar strength because you mentioned how it's ironic because we're seeing a lot of inflation, so the value of the dollar is decreasing compared to goods and services out there here in the US, but somehow we're saying that the dollar is strong. So can you unpack that for our viewers?
Yeah, again, it's like a mirage, right? I mean, they're telling you the dollar is strong. The dollar is showing it's strong on the board, but when you go to spend it, right, you go to buy a loaf of bread. Okay, a year ago, a loaf of bread was $1.79. If you bought the house brand, that same loaf of bread today is $3.50. You go buy a gallon of gas. Again, everything is so much higher that even though the dollar is gaining strength, it is still taking money out of your pocket. Your income is not keeping up with the pace of inflation. Even if you count the ridiculous CPI number they give you, which was 8.5, the last number, I guarantee you, if you multiply that by 3, you might have the right amount of inflation. Okay, but they have quirky ways of counting food and energy. Now, the average American or the average citizen in the world, okay, what do you think their highest 2 expenses are, barring an emergency? Okay, food and energy. But they don't count food and energy. It only counts as 4% of the number. Do I care if I'm buying a new refrigerator once every 12 years that is cheaper? It makes no difference to me. But I'm gonna eat every day, and I'm gonna fill up my tank, whatever has to be filled up. They don't want to count it that way, which is why the numbers we get reported from governments are ridiculous. Okay, they're manipulated numbers to make it sound good, and then they're always adjusted later. Okay, so we can celebrate the jobs number and all these other garbage numbers that they spew out, but any number that comes from a government, and that's not just this administration. Again, this goes back in history. Okay, any number that comes reported, which can be adjusted later, okay, is not a solid number. Okay, the only solid numbers to ever watch, if you actually care about news, and I don't necessarily, except when I'm talking to you, is ISM. Those are private numbers that are by a private party that reports those numbers. Those are not negotiable. Those are real hard numbers. But government numbers are never accurate. They're always more curve fitted. And again, food and energy is everybody's number one cost, barring an emergency in their home.
No, when it comes to those numbers, I hear that if you really calculate them based on how the numbers used to be calculated, for example, in the 80s, the inflation rate would be upwards of 13% right now. We are seeing a cooling off, at least on the official CPI number, from 9.1% in June, and the July number was then 8.5%. And I think the month number, so how much prices increased in that single month, may have been 0. And Biden was talking about that, we're at 0 inflation. But your perspective on that, is inflation cooling off at all right now?
If we weren't on live and I could actually use the vocabulary I'd like to use for this word you just gave me, it's garbage. Okay. Listen, I urge everybody, look at what you're spending yourself. You can tell, one of the things we can tell as people is we go to the store, we know we're paying more for everything. Nothing has come down in price, although the government wants to celebrate a drop from 9.1 to 8.5. Nothing's come down. All we've really seen come down a little bit is the price of oil. Okay, but a gallon of gas, let's say, is down 20 cents. It's still up $2.50 from where it should be. Number one. Number two, how are they getting to that number? They're draining the SPR, the Strategic Petroleum Reserve, which is meant for wartime. And not only are they draining it to try to bring price on, which has never worked in history. This is about the 6th time it's been tried. Okay, but they're selling a lot of that oil to China. Now, why are they selling my oil that's here for wartime to China? Okay, it makes no sense. And again, the government's going to give you the spin of whatever they want to spin it. Okay, inflation is 20% if it's a penny. Okay, and I don't care what they say, 13%, 8%. It's at least 20%. And if you really counted food and energy, it's probably closer to 30%.
Now, coming back full circle here to the general economy and the stock market, we do have a question from Keith. He's wanting to know, do you see the S&P retesting the June lows?
Probably. Now, I got to give you full disclosure here, okay? I trade an algorithm, okay? I do a bunch of different types of trading. Right now, I'm long, day to day. Okay. I'm long all four major indices right now, even though I do believe that we are going to see a 50 to 60% haircut in this market. Okay. But again, until the algorithm turns and it got close overnight, I can't reverse. During the day, and when I'm day trading more actively, I can be short or long. Okay. So right now, full disclosure, I'm long, but my opinion is we're going dramatically lower, not kind of lower. I think we're going to cut through those June lows like a hot knife through butter when they get down there.
And what are some of the indicators that you're looking for that would signal that we're ready to make that next leg down?
Well, I think we have to see first an increase in volume. We're going to see probably a decrease of volume coming for about the next 8 or 9 days, right? We're coming into Labor Day. Okay. Now, anything can happen, right? There can be a fundamental news bomb that could show up out of nowhere that could create a much bigger sell-off. But let's just say that nothing happens that we don't expect, okay? Because numbers we expect, those are kind of priced in most of the time anyways. So let's just say that nothing happens. We'll probably see decreasing volume going right into the Labor Day weekend, right? We've got basically 8 trading days left until Labor Day, and the 8th day is going to be the Friday, which everybody's going to be gone anyways. So we'll see declining volume. I'd like to see more volume. I'd like to see the VIX get a little bit more involved, the volatility index. Now, just for those of you who follow the volatility index, that is not the fear index. That is a misnomer that's misreported by TV personalities, pundits. Okay, the VIX index itself is only an indicator of options being bought to open versus options being sold to open. Okay, sold to open, the VIX falls. And one of the most common strategies is selling naked puts, which is always what keeps the pressure on the VIX. And when the put sellers stop selling because they get afraid, then you start to see volatility rise. But in the meantime, I'd like to see the VIX get a little bit more involved. I'd like to see volume get a little bit heavier here. We've been and dramatically, historically light volume, which is never a good sign over the longer haul. In 1987, we saw very similar action to this. Now, we can never see a repeat of 87, although I did trade on the floor in 87 because of circuit breakers. However, I could see, and I do predict that we're going to see a 50 to 60% haircut. Now, again, I cannot give you a date, right? I don't know when that's going to happen, but you're going to start, when they start to give you assurance, kind of like a coach in sports, they say your job is safe. When they start telling you the banks are strong as they did in 08, in September of 08, we immediately started to collapse. And when they start reassuring you on how strong things are, that's when you should really start to worry. But volume's got to pick up before we're going to start to see anything. I mean, we're not going much farther. And one thing we know, dull markets tend to drift higher under any circumstances.
Now we have a question from Daniel here, and another viewer actually is asking the same question here. Your perspective on the melt up theory. Some investors out there are looking for the stock market to melt up before we see an epic crash, so melt up even higher than the highs we saw, at the end of
you mean
last
the
year
all-time
and
highs?
this year.
I don't see that, but listen, I would never say never on anything. One thing you learn, I've been doing this, Elijah, for 44 years. This is my 45th year of trading. Of being a professional trader for myself, my own account, my own money. I don't trade anybody else's money. Okay. And I've seen everything. I've seen a lot of things, and nothing would surprise me. I don't think there's enough capital to have this market melt up. If you ask me, obviously with this very high inflation, you're hurting and taking away a lot of the middle class capital anyways. I think that the big funds are waiting for opportunities to really get really short in here. And they know that if they act too quickly, then they're going to cause a panic and cause the meltdown too fast. And they won't be able to benefit as much by the sell-off. I think they're letting the buyers melt it up a little bit, and then they come in and sell them a little bit. And I think they'll see what goes on here. But that's why we need the volume, because you don't get the triggers unless you get some real volume. And that's what I think they're waiting for, is some real volume to come in as well. But I think we're basically, although we're higher, and I'm long, so again, I have to always give you full disclosure, but I do believe that there'll be an epic meltdown at some point. And I think once it gets started, now we've had a couple of false starts, which we've seen, but they've always managed to hold. I think once we get started, the next time, there won't be anybody there to pick up the pieces. This is very typical of markets in general and how they trade over time.
We have a viewer commenting based on that answer. If the Fed gives another stimulus, there's the equity for that melt up. Your perspective on that?
I don't think the Fed. First of all, I don't think the Fed can give stimulus. I think the Fed is out of bullets. That's why they're hiking rates now. Okay. Very rarely does a Federal Reserve ever hike rates into a slowing economy. Okay. So they're doing things backwards as it is to begin with. And if you take what my opinion of what this administration's agenda is, which is to destroy capitalism, I don't see it happening. Could it? Of course it could. I'm never going to say anybody's wrong. Okay. Anything could happen in markets, and I will be prepared for anything to happen, but I don't see a melt up. And if you force me, right now for just a trade to pick a side, I'd play the short side. Although, again, full disclosure, I'm always long equities in my retirement account because they're always hedged, and I run an automatic hedge on everything. So I'm always protected to X amount of percent to the downside. It has nothing to do with what my feelings are. Now, 10 years from now, we'll probably be an average of 8% higher than we are today. But what happens between now and then, I could see real disaster. I could see probably one of the worst collapses ever.
We'll have to leave it with that. Todd, Bubba Horwitz, thank you so much for joining us today. Where can our viewers find you online? And do you have any last thoughts for our viewers?
Listen, whatever you do, just always be careful. Okay. You have to be patient and you have to be disciplined when you're trying to trade a market. If you're investing, don't watch, because if you're investing for the long term. It's like my gold. I don't care what the price of spot gold is today. I got the gold put away. And as I tell my members, I'll never sell it. My kids, when I die, my kids will sell my gold. Okay. But be very careful. Don't try to outthink the market. Don't let your opinion get in the way. Let the price action and the charts dictate you on what's going to happen next. You can get a hold of me at bubbatrading.com. And for any of you who's listening, if you ever want to see me on a Monday night, every Monday night I do a strategy call. You're more than welcome to join me. All you have to do is shoot me an email at bubbatrading.com. You can come on as my guest. It's about 2 hours of me yapping and bitching. I guess I can say that here. I don't know if that's acceptable or not, but that's what I do. But I talk about markets and I actually go through charts and break them down for everybody. But it's Bubba at bubbatrading.com, or bubbatrading.com is a website. And Elijah, always great to be with you. I really enjoy your work. So it's great to be here.
All right. Well, Bubba, thank you so much for your time, and God bless.
Thank you.